When most people think of an audit, they imagine IRS agents arriving unannounced, calculators in hand, ready to go through boxes of invoices, receipts, and notes.
That's certainly one type of an audit, but it's not the only kind.
Most of the audits that Big Four firms do have nothing to do with tax day.
And none of them are unannounced. Publicly traded companies are required by the Securities and Exchange Commission to validate their financial positions with an audit. And although they're not legally required to, privately held companies often perform audits at the request of banks, investors, and other key stakeholders.
Their goal? To assure investors and other stakeholders that their cash flows, balance sheets, and profit and loss statements aren't materially misstated.
Firms like KPMG are often hired to perform these audits because they can provide an independent review of how a company operates.
And whether public or private, companies that go through an audit have the opportunity to gain valuable insight into how their business is performing.
So that's why companies perform audits. But what is an audit engagement like?
The word audit means to evaluate. So you could say auditors are the ones who evaluate where money's coming from, where it's going, and what it's doing each step of the way.
Accounts receivables, vendors' fees, acquisitions, operating expenses, there are a lot of channels that money can flow through. And the bigger the organization, the more accounts there are to follow.
Which is why a career in audit can be so dynamic, especially in this global economy. Now, take a typical audit team, say for a multi-billion-dollar company. Now, to serve a client like this, there may be multiple partners working in multiple locations around the world. There may be managers, senior associates, and associates working in multiple time zones. There may even be specialists from tax or advisory practice offering their expertise on everything, from tax compliance to IT controls testing.
Senior members provide leadership and direction, but there's a fair amount of autonomy, so each team member should be capable of self-management.
Of course, communication skills are essential, but in order to really excel at being an auditor, you need to be able to think critically, to understand what business decisions drive the transactions you're auditing.
Why does this transaction benefit the company?
And how does it fit in the company's strategy? Auditors who understand motivations for each transaction bring the right level of professional skepticism to the project, which is important because it's our job to look at the financial statements and see what companies say and verify that it's correct.
Or not.
An audit engagement can take anywhere from a few months to a full year, depending on the size of the client and the complexity of the project.
Unlike advisory, where most of our clients are engaged on a project-by-project basis, most of our audit clients are annuity clients, meaning we work with them year after year.
In fact, we spend so much time at our client sites that some of us even set up permanent workstations at their offices.
While we're there, we spend a lot of time poring over their documents and drinking their coffee.
We compare the documents the company uses in their day-to-day operations against what they've recorded in their financial statements.
For example, we might take the receivables a company plans to report and compare them with actual orders that customers have placed.
We may also contact vendors to ensure that the numbers listed in the purchase orders are accurate. Hi. Yeah, can we go ahead and send confirms to the vendor?
We then take that information and compare it with the information companies are required to report in their SEC filing. And then we state our opinion as to the accuracy of those statements in our audit report.
I'm not gonna lie, audit can be hectic.
We're working in a real business environment, which is always changing.
A major contract can be revoked.
Or won.
By our client, meaning now there's a new transaction to audit.
Or our client could purchase another company, requiring us to do an audit of that company and its assets. Or a subsidiary could go bankrupt, requiring us to evaluate its vitality to the parent company.
Now, changes like this, they can occur at any time and have a profound impact on work that we've already done.
But that's the real world, and it's one of the great advantages of working in audit.
No other practice gives such an intimate view of how business works.
As an auditor, you see why companies make the decisions they make and the financial impact that has across the organization. You also see what companies gain from the services an accounting firm offers. After all, An audit's not done just to meet investor or SEC requirements. Many companies use their audit findings as a basis to make strategic plans for their future. As such, an auditor provides one of the most important business functions. They verify whether the results a company is reporting are correct, while ensuring the obligations they've made to stakeholders are being honored. And that's kind of a big deal.